After an 0-2 start, I'm ready. I should have worn my Bears hat. I really missed that opportunity. Go Bears.
I know, me too. I actually just had one on a little while ago. That's what's funny. I was at my kids' football game. We did not win, unfortunately. We lost that game. After going 6-0, we're down 2 games. They got to get it together, but the Bears have got it together, bro. I mean, in these last 2 games, how about it? On the ground. Not the way you would have thought, huh?
It's any way we can win. I mean, the defense played a lot better. Caleb is looking better. We still have to clean up the penalties, the fumbled snaps, the mental stuff has to get cleaned up. But it's gotten progressively better. So the vibes are better.
Yeah,
I'll put it that way. That's for sure.
Well, and then he gave the game ball to Dennis Allen, who of course used to be the coach of the Saints that we just beat just last year.
Yeah.
I mean, that feels pretty sweet to do. I'm sure. I don't know if you saw the video. I actually just posted it because Adam Schefter had it. I retweeted it. It's a pretty good video, actually. But dude, I mean, Ben Johnson is the coach, bro. Like, he is the guy. He's
him.
He's him. He is him. That's what I've seen these last 2 games. He is him. You know, like unwavering, just looks so much like calm so zen on the sideline, like just whatever, like to go. I mean, the previous 2, not so much. They didn't have that look.
Yeah. Oh, I feel you there. How are you doing recovery wise from the party on Friday? It was
fun.
You see, I was wondering if it was going to be retro tasty. Like, we had a going away party. I think this is the last party we have for Tom and Scott. But I was wondering if it was going to be retro tasty. We're all a bit older. We're not as startup-y anymore. I didn't know if it was going to get as rowdy as it did, and it did. And that was, I was pleasantly surprised by that.
So I came fastly late, of course. I mean, I did that probably out of self-preservation because otherwise I might have started a little early. So I came at the time I came on purpose. And yeah, it was still a little quiet. I mean, I came like an hour in and it was still a little quiet, but like maybe about 45 minutes after that, people kind of started loosening up, man. And it ended up being a great time. It was a lot of fun. I mean, for sure. Like and it's funny because the young dudes, they were kind of like looking around like, dude, this is what a financial party should be like. This is what it's like. Like, you guys don't know. This is what a financial party is like. I mean, and that's kind of tame, but still, this is what it should be like. And it was fun. It was a good time.
Beth saying she's, or is that Frankie in the chat saying he's glad he left early? I didn't see you, Beth.
I didn't even see him. Yeah, I didn't even see Frankie.
I saw Frankie there. I don't know if Beth was there. I think Beth, she did like a Irish goodbye some point. I don't know.
I didn't even know she was there. Oh yeah, she definitely did.
Yeah, I think
real
she snuck in.
Real smooth. Yeah. I know. I was actually trying to talk to people that I don't necessarily talk to every single day. I think it's a good opportunity for that.
Yeah.
So I was definitely talking to some of the people, talking to some of the research guys, production dudes. We were hanging out. It's a good time.
Nobody parties like a research guy,
Yeah.
Every time, all day, they think about Monte Carlo simulations, and then when you get those boys out of the house a little bit, and
watch out,
Malort shots is crazy. These guys, so they're not even from Chicago, and they've already taken that in.
Yeah. Watch out.
Well, getting into the markets here, I mean, we got a minute or so until the market opens. Last week was a wild one. I mean, we had probably our most two-sided action that we've seen in the last. Oh, there you go. You got some.
Wait, what was that? What was that? So here. Okay. Oh, yeah.
Our pictures from the event. There we go.
Oh, this is Detroit. Oh, yeah. Comerica, of course. Yeah. Did Jim choose these pictures or something?
Yeah. Jim's getting ready for his party time. But so last week, I mean, two-sided action, traders market, gold going crazy.
Wait, where is this random stuff, or is somebody sending this from somewhere? Is it like the Ford Museum or something? This looks like the Ford Museum. Model T. Sweet.
Oh.
I mean, Beth still has control of our thing, right? Okay, just making sure.
There we go.
Nice. That's the venue. Yeah, sweet. Yeah. The show's going on tonight, by the way. Yeah, Dr. Jim is in Detroit.
I'm sorry. That's what we're supposed to be talking about.
Correct. Yeah. I forgot too.
Okay.
Yeah, the options crash course live. Welcome, Tasty Live.
Where are the people? Nobody came to see him? The hell? No.
Do they play? When is the Detroit game? Is it Monday night or is it tonight?
Monday night.
Okay.
It's a good game. Tampa Bay.
So, I mean, that's a good week. Is it in Tampa Bay? I was curious. For those who are going.
No, it's at Detroit. Maybe
Detroit,
Dr. Jim
right?
will get there.
There you go. You got some. Yeah, that's a nice little trip. See some Dr.
Hmm.
Jem. See the Detroit Lions if you want. Hopefully they lose. Obviously. How good of a week will it be if we win, Detroit loses, and Packers are struggling right now with Arizona.
Yeah, I need them to win for my little
Don't
pool that
do
I'm in.
it. Don't.
We'll see. It's okay.
I know I
Uh,
got Jordan Love and I got what's his name, Brandon Jacobs in fantasy. But you know,
mm. Well, we got markets open. They quietly open because I forgot to put my ding on here. But we've got E-minis up 18 here. It's the high of the session. Obviously, we just opened here a minute ago. You got the Nasdaq up 89. You got the Dow up 103. The Russell up 9. So everything strongly bouncing today, at least in the for the start of the week. You got oil catching a little bit of a bid. It got down to 57 and change last week. I think it was one of the biggest moves in oil we've seen since April when we got back down to 57. That was kind of the last time we've seen this mark. Volatility futures coming in a bit /CL 2036. We're in 27 cents here, a little over 1%. You have bonds in by 8. You got gold up $55. That was a quick little sell-off that we had on Friday. Really the only weakness that we've seen in gold in quite some time. Silver up 74 cents. And Bitcoin having a nice little weekend here, up $2,500 on the futures, spot up 2,300. But it's been kind of a dog. Anything that you're thinking about this week that sticks out to you? Is the gold move done? Have we put in like a top there? Silver had a 3-4% down move on Friday. Huge move there. Bitcoin is kind of at the lows. Are any of those things interesting to you besides the equities themselves?
I think gold is one of the most interesting. I'll go on that in a second, but I had to find this stat. I knew I saw earlier. On Friday morning, the VIX jumped above 28, while the S&P was within 3% of an all-time high. And it said this also happened during 1999 and 2020 and 2021 melt up. So it was kind of a rare and it was a very uncommon and rare occurrence. I didn't even remember the VIX getting above 28, but I guess it did for a little bit maybe. But that just to me speaks to this environment. I mean, I think I've been talking about that quite a bit over the last couple of weeks. I think this is just a magnificent environment. I mean, and you're seeing a lot of things move, and gold is, I feel like, almost becoming the epicenter of what's going on in this environment. Why does gold? It's crazy because gold. Typically, we used to see markets get scary. That's when gold goes up, right? Like because it's one of those sort of volatility sort of identifiers in the environment. And we've seen gold, we've seen the market go up big and gold go up, and we've seen the market go down and the gold goes up. So I don't know, to me at some point, some things, and even with the dollar too, it's not even matching the relationship with the dollar anymore. And I feel like something is kind of broken, and I feel like sooner or later it's going to correct itself and fix it.
I'm glad that you talked about the dollar. Obviously, the dollar being weak has kind of masked all this, and I think is like kind of just a silent bid for equities and gold and all that stuff. But I think this last week / this weekend has been the first time I think I've seen financial media, and I talk about I'm in reference to like mainstream financial media talking about gold and silver, talking about gold mining stocks. I mean, that's usually a signal that like
Yes.
we're kind of near the end of it. Maybe there's a little bit left. But when you got people coming on saying that they loved gold for 3 or 4 years, and you've never heard them say that before, it's usually a sign. So we'll see if that plays out. We do have a handful of earnings too coming up this week, so those are going to be some movers as well. Just to name a few, you've got like Tesla and Netflix. Those are the two biggest names. So Tesla at 440, been pretty strong even into Friday's kind of weakness. Netflix as well has been pretty choppy, been around this 1200 mark for the better part of a couple months. They're the first big names, and then next week we get like your Apples, Amazon, Google, Microsoft, all those. You also have GE Vernova in there. So start of earnings season here. We'll see if the volatility stays bid throughout the week, but it really does seem. I know that chart that you referenced. Vecchio put it out there, our resident bull, who, in between feedings is coming to give us, feed us with some tasty information here. So he gave us that chart. It feels like every dip is just a buying opportunity. It's that easy. You just close your eyes and you buy some more if you have more capital.
I just think like when you hear a stat like that where VIX was above 28, market was in 3% of all time high, I think at some point there's going to be a vicious, ugly turn. I really do. And again, I'm not saying like we're going to be down 10% or I'm just saying like it turns at some point. It'll be intraday, and that I think that's why I'm a little nervous now about buying dips because we'll be able to buy these dips until you can't. And again, I'm just saying that based on the environment, dude. Like, look at this environment that we have. Markets are basically near all-time highs, which again, there's nothing wrong with that. But when you couple that with VIX in the 20s, on the precipice of possibly 30s, when you couple all of the different things that are going on, when you couple the fact that we have earnings, you couple the fact that Bitcoin has had a pretty interesting fall. Again, I won't call it a big fall because for Bitcoin, look, historically, this is something that 20 to 30% is not out of the realm. It's only down like, I think it was only down upwards of maybe 15%. And again, I think that speaks to the maturity of the product at this point. But again, it's been down. It's been moving around. And again, we got these earnings coming up. You see where oil has dropped off from. Like everything seems live right now, Nikki. Like everything seems live, and then you can put on a trade in just about everything. I damn near have on a trade in just about everything right about now, and I'm starting to I started scaling back a little bit on Friday on a few things here and there, just because I want to have capital ready for what I think might happen and when it happens.
Yeah, and Friday was like the perfect storm of if you've been laying into some premium early in the week, into some of the down moves and the pop and volatility, and whether you're doing puts or strangles or iron condors, anything like that, you do those trades on Monday, Tuesday, and they kind of hurt on Wednesday and Thursday with some of the action that we were seeing to the downside. And then on Friday, you get that nice bounce, you get a vol contraction, and a lot of those positions come in way quicker than you expect. And so I was in that same boat of like just kind of peeling stuff off that worked really quickly, and kind of setting my, trying to cycle through positions, get into stuff that has higher implied volatility. So yeah, I'm with you there.
So Netflix is the first. Is that the first big earnings? Is that Tuesday or something like that? I think
Netflix will be on. So Netflix, we have earnings coming up on the 21st. So that'll be
Tuesday. It's Tuesday after the close.
Tesla is on Wednesday, I believe.
Yeah.
Tesla is on Wednesday, and then you got a handful of names in between there.
Yeah, Texan, Capital One,
IBM is in there.
Yeah. IBM. I was talking about this with somebody recently. IBM it's not your father's IBM. This IBM moves, bro. Like, actually, it is kind of your father's IBM because it used to move a lot like back in the day when he was trading on the floor. Then it was really quiet when I came in the game in like mid 2000s. I mean, it was like, it really didn't do much at all. It was boring. And now all of a sudden, again, it moves around quite a bit.
Yeah. We got some people calling for what happened with the bond market of all the bankruptcies and whatnot. Well, the bonds are down 6 ticks. So I don't think anything much happened in the bond market. I don't think the Tricolor or the two of the auto financing companies that,
Yeah, I got a buddy that works at Jefferies actually, and they were talking about that, and you've seen like the move on their stock price. I actually was able to sell a put in there like last Thursday and out of it on Friday, which is really nice. But yeah, you're right. There's like two different those weren't massive bankruptcies though to affect our bonds like that. Like they were like 100 million. I mean, I don't mean to sound like pretentious in any way, but that's not.
It's a rounding error. Jeffries doesn't care about 100 million. Come on,
they'll be fine, and they're sharing that risk with other people.
Yeah,
he does. But you bring up a good point about these banks. How about that? That's another thing to add to the mix. The KRE, the mid-sized banks, right? Like the regional banks. That has been also an interesting area of the market.
I mean, it's like deja vu, just with a different story. We had the what was it? SB.
SB.
The one that went away, Silicon Valley Bank.
Yeah.
I forget the ticker, but it's like, you have these moments where these stocks, which are historically low volatility stocks, just go nuts.
SVB.
SPV.
Silicon Valley.
And it's kind of back in the news cycle. There's the problems with the regionals, smaller banks. That's kind of the weakness you've seen in IWM as well. The Russell over the last couple sessions has been weak relative to everything else, kind of bouncing. So maybe a little bit of that is there.
So I mean, as we've been at all-time highs recently, I've for the last couple of months, right? We were like, well, honestly, I wasn't that surprised because really there was no wall of worry. Nobody was worried about tariffs anymore. That was the biggest thing coming into this year, right? Now all of a sudden there's a lot of things, right? There's a little bit of wall of worry. This is part of it. We talk about these banks, the way that Bitcoin has been falling, the fact that gold has been doing what it's doing. That's kind of a part of a wall of worry, bro. Like gold is not supposed to do that unless things are fearful. Gold doesn't move that much in 1 week unless there's fear, and yet there's no fear in the market. So again, I'm just telling you, man. I'm just telling you, something's wrong either with gold, with the market, or with the dollar. Something's wrong.
So, well, yeah, maybe our man behind the scenes here has something to say about that because he's way more macro than I ever could be. Let's bring on Mr. Ilya Spivak here.
Gentlemen.
How are
Ilya,
you, sir?
I got a serious question here, Ilya.
Yes, sir.
How are you handling it all that we have no macro data to be mentioned at all? I mean, how are you handling this? Are you okay? Are you sleeping okay? Are you fine? Because this is really tough for you. This is really tough. There's no macro data.
There is no macro data, but thankfully the markets remain open and there's price action to look at. It's also definitely very encouraging that in the absence of macro data, the markets are finding a kind of default without getting pulled away by every shiny thing. And we're actually starting to see that default kind of start to give us a little something. Last week, I think, was a very interesting week because we came into it from that crazy sell-off. And I think you just said it. We went months without worrying about every tariff headline. We went a good 6 months without anybody caring, going, this is a taco thing, whatever, blah, 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 blah. And then he does his regular thing, his regular song and dance, and all of a sudden, collapse. Now, what happened in its wake last week? Nothing. It couldn't come back. It tried every single day last week to come back, NASDAQ especially, and it got rejected every single time. And it wasn't because there was macro data. It wasn't because anything happened. It wasn't because the story got worse. It didn't. He came out and walked it all back. First, he sent Besant out there. Then he sent Jameson Greer out there. They all came out like, whoa, no, back up. And then he came out there himself and said, listen, that President Xi had a bad moment. It's all good. Markets had every reason to run. They didn't do it. Not only that, but last week we saw something we hadn't seen in maybe 6 months. We saw the market not like rate cut bets. Last week, bonds were up. The pricing for the Fed got a lot more dovish. And stocks couldn't make hay of it. First time in 6 months. All the Fed officials came out and said all the things that the markets wanted them to say. I think you're right. Something is broken here. The dynamic is changing. And it need not be a crazy collapse. Holy moly, it's 2008 kind of a thing. But it does look like the market is behaving differently. And when you look at gold, that's interesting too, because this whole debasement trade idea is obvious nonsense. There would not be a rallying dollar, which has been rallying since the Fed. There would not be a rallying bond market if that's what was behind gold. So it was really interesting on Friday when Trump came out and said, no, I'm still going to meet with Xi. It's all good. Forget it, basically. That gold fell. Because in my mind, what gold is a bet on the U.S. and China drifting further and further apart, right? And for third countries needing a go-between. Because if these two things stop doing business, and you're Brazil, you've got to be able to clear deals with both. And you need a middle ground if these two won't talk to each other. If all of a sudden China says, we're not doing business in dollars anymore, good night. You need a third way. And the moment that they walked it back, gold collapsed. I wouldn't sell it, though. I'd rather buy it whenever it's done falling.
Yeah, that's been the thing, right? They've been talking about China buying a lot of gold, China's central bank, and all of that, right? That's kind of
they've been buying hand over fist. Right. Really, one of the biggest stories in gold, even going back to the beginning of 2023, middle of 2022, even was China was just buying and buying and buying, and a lot of it was they got Russia on their clearance rails for invoicing on their systems, because obviously Russia has been cut out of the dollar clearing system. And if they want to get more, because obviously Russia has to, beggars can't be choosers, they got to sell oil to someone. If they want more people on that system, they can't invoice it in yuan. Nobody wants that. It's non-convertible. So how do you do it? The theory out there has been that China isn't going to back the whole yuan with gold, but that they're going to back the transactions on their version of the clearing system. And basically say, if you don't want to have yuan, there's an automatic gold conversion here. Take your gold, go elsewhere. So it basically becomes like a third way go between for countries to exist in the China payments system and in the dollar payments system.
So you mean
it's going to fail, but that's what they're attempting. It's not going to work.
Me that everybody else is using Apple Pay, but like China's using
it's not going to work.
Well, it's Apple Pay backed by gold.
They are trying. They are trying. Their biggest problem is the biggest consumer market is not them and won't be them at this rate. And so they have to do business with the U.S. because somebody has to buy things.
I've got to look this up myself as I'm about to ask you guys this. What's the biggest trade you have on right now?
Long dollar?
Like just notional. Oh, okay.
What do you like long dollar wise? Because
I'm long a whole basket. I'm short Aussie, CAD, pound, euro. In the spot market, I'm short yen and the franc. The franc, by the way, is the one that's not working. But everything else is doing fine. I'm long it all. I think the dollar had its holy moly in the first 6 months of the year. I think it's done. The dollar hasn't set a lower low since July. And all we've been talking about is Fed rate cuts and how the gold rally is a debasement of some kind, which, again, obvious nonsense because bonds wouldn't be up and the dollar wouldn't be up. For all of that, the dollar hasn't fallen in basically 3 months. A little bit more.
That's when
that's a market that's just waiting. It's done falling. It just it wants its spark.
It was the beginning of July. You can ask Chris. I just started noticing it. It was around that time before 4th of July, and I think when I came right around the time before we left, I was like, dude, it's time to get long the dollar. I mean, this is ridiculous. Yeah. Like
I've been piling in. I've been building a position here for a few months now, and just adding and building.
Yeah, I got a short put spread in the euro.
Yeah, the euro's had some volatility here, as well as the Aussie dollar too. But if you think if you're leaning this bullish on U.S. dollar, you got to think that money comes out of gold, silver, equities in some way. I mean, you've got
equities for sure. Gold and silver are weird because when you have a big non-economic buyer like China that's just buying every single dip in gold, it's difficult because it doesn't necessarily care about cross-market relationships or anything like that. So I'm careful there. But stocks, yes. If you take a look at a chart of Bitcoin, I think I got a put spread on Friday in IBIT in a hurry. Because that range looks like it's cracked.
You can't stand Bitcoin, can you?
when ETFs became a thing, I was like, oh, I can short this now. Here we go.
Yeah, Jamal, this
Because
is a
before you
combination of like a tech stock and short dollar, all like wrapped into one.
is.
That's
Oh,
big,
yeah.
and short gold. It's all the thing. It's like the
I love
opposite
it.
of what Ilya's like
I love
mind
it.
is.
Now, mind you, I was short the dollar in the first 6 months of this year.
Yeah.
In size, and boy, did that paper over my sins trying to short the stock market. That bailed me out completely.
Yeah.
Thank you, dollar. That was great. Let's go the other way now. Let's see if it'll bail me out in the next 6 months.
What's your
as
number
I fight
one
the
pair?
stock market?
What's the number one pair? Do you go just to euro, or do you find one of the
I look
other
at everything. I look at everything. By the way, one of the really interesting things that happened last week, another thing that gets you to go, these markets are doing something structurally different than the past 6 months. The dollar was up against the Aussie, the Canadian dollar, the Kiwi dollar, all the growthy stuff that's stocks adjacent. And then it was down against the yen, the euro, the franc, all the safety stuff that's anti-risk. And that told you, wait a second, this market is configuring. It's setting up for some kind of a risk on, risk off binary something. And in my mind, Bitcoin is like the highest beta risky thing of the semi-major assets. If it's breaking, if that range crack is real, stocks are not far behind. If risk sentiment is fizzling out here, and that's what Bitcoin is hinting, that's going to spread.
I mean, yeah, I just feel like, again, there's just so many different things happening. And I think a lot of times that there ends up, being a culmination, and eventually people kind of running for the exits a little bit once you have so many things, right? We just talked about all the different things, and there's starting to be a lot of stories behind them, whether it's Bitcoin, whether it's gold and silver, whether, actually, oddly enough, I mean, there is a story behind bonds to some degree with regard to the rate cut stuff, but they've been fairly
quiet. They were talking all kinds of dovishness last week.
Yeah, they've been fairly quiet. I mean, but, there's a lot of noise around Bitcoin right now. There's a lot of noise around gold and silver. There's obviously a lot of noise around the markets. Oh, yeah. And then we got earnings coming up, and like major earnings. And I just think it's a great time to trade. I'm not saying I'm, anything trying to scare the kids. I think it's a great time to trade. I think there's a lot of opportunity out there. But I think last week was your first indication that you're going to get two-sided markets in a lot of things. So be prepared.
That markets in the absence of things getting any worse on the news, in the absence of anything terrible in the earnings were fine last week. The banks reported everybody was okay. They either beat or rarely, I think in 2 cases, came in spot on. Nobody missed. So in the absence of bad news last week, the markets, they couldn't do anything. They could not get back, though nothing got worse and though they attempted. That's not great. In the currency world, if I had to pick one thing, like if you had to pick a currency, it's the Aussie. Because that's the one that's the most exposed to risk. It's the one that's the most exposed to some sort of a US-China kerfuffle.
As well, right?
Yeah, to some extent.
Yeah.
To some extent. And you have a really clean range here where right around you've got a clean line in the sand. If you get through that, you have a bunch of recent lows there. You get through that and hello.
Yeah.
Good stuff.
Yeah, man.
All right. So what are we looking at Monday, guys? You think volatility stays bid, or they crush it here going into the open of the real session?
I think it stays bid.
I think so too. I think everything we just talked about with all the craziness in currencies, gold, Bitcoin, banks, no data coming through, all that stuff is going to keep us on our toes here with a little bit of volatility.
Yeah, it's a wild week because even if you wanted some data, there is not much until you get to Friday when you get the S&P Global PMI numbers, which thankfully are not government data, so they will come out, and that'll be like a global growth check. But until then, there's really not a whole lot. Maybe we get U.S. inflation numbers on Friday if these people decide that they want to end this shutdown. But
I did see that. I did see that on the calendar. It's like they pushed it to like.
I saw it on the calendar. I'm like, what is this, like aspirational?
Yeah.
ELS, like maybe Friday.
They're just reminding you. They're reminding you that it's not resolved yet.
Yeah, so we're just gonna leapfrog the NFP numbers and go, okay, listen, forget it. Don't worry about that jobs report that we missed. Let's just go straight to CPI.
Let's look at these event markets. I gotta see when the government shut down, and I know it's. Where is it at now? What's the highest here? The highest is 44% says November 16th or longer. That's 44%.
Wow.
Yeah, that's what people are thinking now.
Is that right around the November expiration, monthly expiration?
It seems like it might
Probably somewhere around there. 21st. Okay.
Yeah. Yep. It was that's what people are predicting. So who knows? Do we have it's another week before we got Fed meeting, right? Another week before that, 29th?
Yes, 29th. That's right.
All right. Dude, there's just so much going on right now. And I know people talk about seasonality. I don't really buy into it much, but I will say this. We do know historically there's been some tough things that happen in October and October expirations. So there's that. There's also a VIX expiration this week on Wednesday. Yes. And this was a longer cycle. This was a 5-week cycle, right? Like typically VIX expiration is during the same week as options expiration. Not the case this time around. We already had options expiration, obviously just passed. So we got this VIX expiration coming up. We've seen crazy things happen around VIX expiration. Obviously, there's a lot of things expiring, a lot moving, a lot happening. So, keep an eye out on that. And it's also on the day of a big earnings. I mean, I don't know, man. I just foresee like a day where, we're up big and then maybe the day before we're up big and the next day we come down big, we turn around. I just feel like there's going to be movement in this market. We saw it last week, and I think we're just going to continue to see a little bit more of it.
Yeah. Yeah.
Well said. I think that's perfectly said to go out on that. What do you guys think? We take a quick little 90-second break, come back and do this all over again tomorrow?
Love it.
Sounds perfect. We'll see you then. Peace, everyone.